What's up, guys? It's Binary Mastermind here with you once again, and today, guys, I'm going to be showing you guys a very profitable trading strategy. Before I do show you the strategy, guys, I want you guys to always come to this website right here before you even start your tradings for today. Go onto this website here. It's called myfxbook.com, and on this website you'll be brought onto the home page. The home page will be look something like, let me just get it for you. It will look something like this. And you want to go into home, hover around it, and you see economic calendar. You want to click that bit right there, and you'll be brought to this page right here, as you've seen previously. Now you want to scroll all the way down to like the recent, all the way to the previous events. Come on, stop doing that. There we go. As you can see here, next 2 minutes we're going to get some news right here, and it's a low impact movement, so that's great. It's good to trade in these sort of movements. You want to try and avoid these high impact movements, guys. Or if you see these none, where it says none, these gray bars, you want to avoid trading for the day, guys, or for that period of time. Why I do say you should avoid these high impact movements, guys, because the markets are going to be quite volatile, and you don't want to like trade. As a beginner, I would advise you guys not to trade in that kind of market conditions. Just practice on the medium and low, so that once you perfect the strategy on the mediums and lows, then you can go on and trade on the high impact. As beginners, guys, I would say avoid trading in those high impact movements, guys. Okay, guys. Now the strategy is based on these indicators right here. You have some red ones, some green ones, some white ones, and I do avoid taking these white ones simply because price tends to fluctuate. Like, for example, this white one could have been here, for example, and it would have dipped down. As you can see, it dipped down, but sometimes it moves a lot. So, for example, it could have been here, and say, for example, this trade lost, right? It will tend to move a lot. In my opinion, I feel like it does. Like, for example, it could have actually been this previous swing here. So it could have been here, you put a trade for 5 minutes, 1, 2, 3, it lost that trade, and it came up again. But within the second martingale, normally the first or second martingale, it tends to come in, but sometimes it can go up to the third martingale or fourth martingale. So I do tend to, if I see a white signal, I tend to go pretty much a lowest trade size, because I know there's actually high probability of it actually going against me again. So I tend to take a small position, wait for that trade to expire, and then go again. Wait for that trade to expire, and then go again. That way, it really minimizes my risk I take on each trade. Now, how these trades work? If you get a red signal, it's a put. Sorry, for 5 minutes, you put a put for 5 minutes. You want to try and get your entry, guys, as close as you can to these signals here. So you get a signal here, you want to try and get it to the tip. Right here, you put a 5 minute call and put. Sorry, 1, 2, 3, 4, 5. Your trade expires somewhere around here. You entered here, you make a profit. Depending on which broker you use, I use IQ option, and they're very high payouts. Look at that, 88% payout. So if I was to ever win a trade, if I put 1,000, if I win that trade, I'll make $880 profit, and I get my 1,000 back as well on top of that. Now I tend to martingale, guys, but martingaling is, if I was to ever lose a trade, my next trade would be 2.5 times bigger. So my next trade would be 2,500. My next one is 625, and my next will be 15,625. But I tend to stop my third martingale. Sometimes I do push my fourth, but I don't do it very often. But I would say, as beginners, guys, just take 3 martingales. If you do lose for the day, just call it a day and stop, and come back in the next day and start again. And start trade your trade size from 0.3% of your account. So with this particular account, let me just work it out for you guys. My maths is not quite. I'm not gonna calculate that right now. Let's round it up, and let's say it's 190k. Let's round it up, right? Times that by 0.03. That's 3%. So 3% of this account would just be 5,000 something. So me using 1,000 is actually even lower risk. So the lower you put your risk, the higher probability. You don't put as much risk out there. You want to avoid putting too much risk out there. You want to minimize the amount of risk you put, but then maximize your profit. So you want to take not too much trades. I would say take a decent amount of trades, but just minimize your losses, guys. As you can see, this strategy does work. Of course, it's not 100%. You do face losing trades, like myself. I do face losing trades as well. When you get a green signal, you take a 5 minute call to the upside. This is a call here, guys. You get a call and a put. Call meaning up, put meaning down, and the expiration is 5 minutes. This is the last one here on IQ option. You click this time bar here as the last one here. I will leave the link for IQ option as well. If you guys do want this strategy, email me. I'll leave my email in the description down below. And I'm giving the strategy for absolutely free of charge, guys. I'm not going to charge you a penny. Just email me and I'll let you know how you can get the strategy for absolutely free. Now, what I do tend to do, if the price breaks above this 200 period moving average here, guys, what I tend to do is only take the green signals and I put maybe 5% on top of that trade, because it's a very high probability trade. Reason being is, for one, price is higher, price is above this 200 period moving average, so it's classed as an uptrend. If price is below here, you want to just take the red signals, so it's classed as a downtrend. So as you can see here, this one would have came in, but guys, the white signals can either mean a put or a call. Just bear that in mind, guys. So this white signal could have actually been somewhere here, or actually it could have been here, and it moved up quite a bit. But if you took the trade here, it expired. You take again here, and you would have probably won it. I reckon you would have won it on the second or the first or the second martingale. It does depend. The white signal, most of the time it's probably the second martingale, but sometimes it comes in at the first martingale. So just bear that in mind, guys. So if you want to take this trade, guys, just bear that in mind. You are gonna face some losing trades every now and again. Now, I'm gonna take this trade here and then see what happens to it. Let's see this white signal right here. Yeah, what is it? No, let me look for no setup. USDHL. There you go. Yeah, I'm gonna put a 5 minute call, 5 minute put. I'll put 1,000 on this one. Okay, and we'll see what happens to this trade. Okay, let's have a look, guys, and see if this trade did come in our favor. Currently it's out of the money. Let's have a look. And my entry wasn't the best as well. It was the main entry point. You want to get the best entry point. I'll say is you want to try and get as close as you can to the signal. If you get lower, I would say go in a little bit smaller than you usually would. Going a little bit smaller. But if you get the signal on top of the signal, you want to take 0.3% of your account. Now, if you don't want to martingale, guys, end up into martingale, I would say take 1 to 5% of your account per trade. If that trade loses, don't worry about it. Wait for the next setup to come in, and then take maybe 3% on the next trade or 5%, just depending on how much confirmation you have. Now, confirmation, I would say a perfect setup is let's see, let's look for a perfect setup. Let's look. Would this be a perfect setup? Let's have a look at this one. This particular trade we're in right now. Would I say it's a perfect setup? I will not say this is a perfect setup. Perfect setup is you want to see let's look at this one here. Let's see if this is a perfect setup. This is somewhat of a perfect setup. Why? We've hit. Oh, that one did come in. Look at that. It did come in. The good thing with buying options is you don't have to be completely right. So long as price comes below your entry price, the price that you picked, you will still make a profit, guys. That's why I love trading buying options. It's not as forex. Forex is like the price has to go in your favor in order for you to make a profit. With buying options, you just have to be right by 0. What's that? Well, a micro pip. Like that's about 0.10. That's about 0.1 pip in our favor. 0.001 in our favor. Look at that. 35, 45. Wasn't even barely moved. In forex, you couldn't make a profit with that. It's not even a pip, guys. Not even a pip. But as you can see, the strategy does work. But here, guys, this is what you want to see, guys. For a perfect setup, here you've got stochastic. Here you've got the divergence. Here it's out of the divergence, so that's 1. It's out of divergence. That's 2. It's crossing now. That's 3. You've got a signal here. That's 4. We've got structure. Let's have a look. If you put a line here, what you want to do is if you put a line right here and you want to go into like a higher time frame and go to your previous area. Okay, now let's have a look. Now we go back in time and see if price, yes, as you can see, price did touch this level. Last time it touched it, it broke it. Guess what? It touched it again, and reverse came down very heavily. So I know this is a good area to trade in. So what you want to do is always, whenever you look at this, you see a setup. What I'll say is, once you see the setup, if you got as much as 3 to 4 confirmation, take the trade. Take the trade, and you can put as much as 3 to 4%. Don't put all the way to 5% if you're not too sure. Just bear that in mind, guys. Of course, look at this trade now. This setup here. You guys can use it on the higher time frames. You can use it on the 5-minute time frames, but the only difference is each bar is going to be 5 minutes. So one trade out is going to be 25 minutes per trade. Now, if you guys are willing to wait that long, just because you're taking a high time frame doesn't mean you can put 10% on your account. I know a lot of people email and saying, "Oh, can we use the strategy on a high time frame?" Yes, you can use it on a high time frame, but doesn't mean it's there's a high you can still there's a high chance of you winning a trade. Yes, there is a high chance of you winning a trade because it's a high time frame. But don't get me wrong, you can still lose trades. You can definitely still lose trades, guys. So don't go ahead and take 50% of your account. People are taking 10% of their account because they think, oh, it's a high time frame. There's 100% sure that it's gonna come in. No, this is an 80% strategy, guys. There's still a chance of you losing trades. I mean, I would say you can trade 5 minute. I do trade 5-minute time frames if my 1 minute, if the 1 minute chart doesn't look like, if there's a lot of consolidation like this and meaning not a lot of movements. I do tend to go to the 5-minute time frame and trade on the 5-minute time frame. I don't do it a lot. I just do it if the market isn't really going in my favor, I would say. And you can use it on a high time frame, but just bear in mind, guys, do you really want to wait half an hour to place one trade? I mean, in half an hour, I could place at least 4 trades, and the risk reward is going to be pretty much the same, guys. you're gonna place £100 trade to get an 80% payout. You're only gonna make £80 or lose £100. So why wait an hour to know if you're right or wrong? There's no point, guys. You might as well just stick on a 1 minute time frame and trade with that. If the market is quite shitty that day, just allow trading for the day, and come back in maybe a few hours later on in the day. Okay, guys, if you found that this video is very helpful for you guys, please like this video and subscribe to my channel, as I'll be pointing out more content like this on a regular basis. Well, at least I'll try to anyway. And that is it, guys. Thanks for watching. That's Aspiring Mastermind signing out.